Dr. Jerry Monfant is president of MBIC Group, and he's joined us to share some views. He's a global management and strategy consultant, to share some views on the budget he has heard and some of the statements that were made by the finance minister. Doc, thank you very much for joining us this evening, and I hope you're well.
I'm doing great. I'm doing wonderfully well.
It's been quite a while since we spoke on this network.
Yes, that's true. It's really been a while. It's taken a long time. Right.
Well, and I'm sure you're observing things as they have been happening. And one of the things that we are talking about today has been the issue of the running mate of the National Democratic Congress. I know she's not at the position where you're going to talk about management of the economy or anything yet. But the last one, the one we have now, reminded us whilst he was running mate in 2016, from 2014 to 2016, of how good an economist he is and how well he was going to do, and how he knew the problems that the economy was facing and how he had some diagnosis for how he will improve it. Based on what you're hearing from the budget, are you getting that sense?
Yes.
Has the vice president lived up to expectation?
No, I don't think he has lived up to his expectations. And I don't know if I had to have to go through details for you to know what I'm talking about. If time will allow me, can I continue?
Please go ahead, Doc.
Can I continue?
Go ahead, Doc.
That's correct. Well, very good. The budget was built on 8 pillars initially for 2020. Now, the first targets that we're looking at was the domestic revenue mobilization. And then they also came out with establishing Ghana as International Financial Services Center. And the third one was digitization of the economy. The fourth is accelerating infrastructural development. The fifth was foreign direct investment, which means that they have to get a lot of foreign direct investment into the economy. And then we also look at science and technology. And then we look at a seventh one, which is the financial support to enterprises. And then the eighth is the business regulatory reforms. This was the objectives and the pillars on which the budget was actually established. But as you should know, when they even came out first, I came out with my own position. They said that they were going to accelerate infrastructure. And the budget by then, which was 2019 getting to 2020, was just 9 billion. That could account for, currently, that would account for, let's say, $1.5 billion. And that is nothing to write home about if you really want to accelerate infrastructure for a developing country like Ghana. Now, we talk about digitization. On the digitization front, you realize that they had this house addressing system. They came out with the Ghana Post, GPS. And the sad issue is that when you even get to the airport and you want a direction, and you have to give the digital numbers to a taxi driver, they will not be able to drive you to your home, because it doesn't work. We've been using the normal GPS that we've been using almost always, every time. So that has got to do with the waste spending, and it's not leading us anywhere. Now, we come down to direct foreign investments. When you come down to direct foreign investments, what you will be considering will be the exchange rate. You want to be sure that at least our country is so competitive, and then we have a better, stronger city to be able to, battle up with the other foreign currencies, to allow in foreign investors to have confidence into our country and then come and establish. I give you a typical example. We had what we call automobile industries that had actually moved into Ghana, about 2 or 3 of them already in the country. And some of them are producing a brand new vehicle at a cost of 60,000 Ghanaian cedis. Now, the challenge is going to be like this. If we cannot manage our exchange rate, and then we have exchange rate disparity, if they could manufacture, they're not manufacturing it here, this is just assembling area. That suddenly means that they manufacture from outside and then they have to bring it, come and assemble here. If they sell it at 60,000 and they're going back to buy the new parts, because of the fluctuations in our currency, there is a possibility that they wouldn't be able to get it as the previous price. And indeed, that will not make them a competitive. And that necessarily will not give them the sun to be able to stay in the country. That's why the pillars, there's a few of them that I could just mention. And then the other side of it was establishing Ghana as international financial services. You see, when you want to establish a country as a financial hub, there are some requirements and there are some securities that we expect from the government. We were expecting that what is the security for depositors? If they have to put their money into the banking system and there is a financial collapse, how do we get our money? As we sit today, there had not been regulation towards this. And the emergence of the Security and Exchange Commission, the insurance company, and the banks, all these are financial services organizations. We don't have a single law fitting for all. What is actually happening today is that in case you have money with any of the investment companies, and then they collapse, with all that they have to do would be to sell their assets and be able to pay you off your money. And all of us know that the asset of the shareholders will not be enough to even account for about 20% or 10% of the total amount that depositors might have actually invested in such companies. So that makes investors much more vulnerable. And it makes it that achievement of making Ghana as an international center for financial services is just a dream, a mirage. Now, let me move you quickly down to the mid-year budget review that the government did. And let me tell you the technicalities of it and the implications of it. Now, when they came out, they say that as of June, because it was a mid-year budget, so the budget is expected to end in June. As of June, inflation was 11.2%. And they attributed it to the fact that because there was a lockdown, or there was going to be a lockdown, there was a panic buying. I see this one as much more of a policy failure, because you should have foreseen that indeed it could drive inflation. And you should have found a way to be able to stabilize the economy to avoid it slipping down. The one funny thing is that when you come down to the monetary side, I want to just share an idea about the monetary side and under which circumstances they believe that they are the best managers of the economy, and they have been able to do better than the previous government, and so on and so forth. Now, let me show you something small. And I'm going to demonstrate this for you to understand that, you see, economy is not about rhetoric. But what happens is that when one's other side is going down, the other side will be responding, and you'll get to know whether it's actually making sense. Now, the policy rate of the central bank was reduced from 16% to 14.5% per the mid-year budget. And this is what the government do, or he did. The objective is that when you reduce the interest rate down, you know, the debt will be so much affordable to allow people to secure loans to be able to do their businesses. That is one of the major core reasons. Now, the other side of it, the government also said that had been monetary intervention to be able to allow the economy to boost back, is to reduce the reserve rate. That reserve rate is like this. Most importantly, once you put in deposits into the bank would allocate about 12% or 10% and give it to the central bank. And the central bank would hold that one as a security collateral. That is to mean that in a situation whereby the banks are having challenges, they will be able to push in this about 12% of the bank's money and give it to them for them to stabilize, whatever it is. So they are looking at it that, look, if we have to reduce the figure, if we have to reduce your reserve rate from, let's say, 10% to 8%, it means that we will spare you about 2% of total deposit. And that would mean that you would inject a lot of money, which we call liquidity, into the economy, such that you would be able to give it out to a lot of people to be able to grow the economy. Now, the fanfare of it is this. Banks does not run with this. What banks runs with reserve is that banks will first have to consider their monetary consideration or their profitability considerations before they look at reserves. Practically, there is no bank that would allocate reserve now before giving out loans. There is no way banks do that. So in the first sequence of it, this would not result into necessarily adding up much more liquidity into the market. Granted, for all reasons, that even the government was okay by his way justifying that indeed it can really boost the economy. Let me show you one thing, one stage we're in. At the same breath, we have Ghana fixed income bond market that has recorded a significant amount of 45.6 billion Ghanaian cedis. That was somewhere as of June 2020. And this indeed, this increment, or possibly this indeed, represents represent about 161% of increment from the previous year or from the same period. Now, let me tell you the technicalities if it happened like this. What it means is that as the government has reduced interest rate and then has also reduced the reserve rate, granted we have the money into the system. If there is money into the system, what happens is that the banks might not be granting loans. What the banks would be doing is that they would rather be buying the government bonds. They'll be buying the government treasury bills. And once they're buying government treasury bills and bonds, these are what we call the fixed income investments. So your fixed income investment will be going high. The government thinks that he's rather pumping it into the economy, but he's pumping it back into his own governance. It is not into the economy. Because if you tell me that you have reduced interest rate, if you reduce interest rate, the possibility is that there should be more money. And then people should be able to afford the debt. And so people should be able to have debt. Good. And then you also have it that rent. If you have given out or a lot reduced, you've reduced their reserve rate, which means they wouldn't save more with you. It means there should be much more money into the economy. Now, this is supposed to be that we have to see business activities going on. But Senator, could you believe that inflows into the economy, credit into the economy has reduced from 17% to 12.5%. So if it has reduced to 12.5%, it means that there's no credit into the economy. The funds hasn't gone to the economy yet. So what is happening is that all the funds have been used to buy back treasury bills with the government. So those monies are not in the economy. So if you come back to tell me that you're a good manager of the economy, I will tell you that, look, you were trying to just cut your nose to spite your face. There is no way you could run a good economy from this angle and from this perspective. Now, let's look at it this angle too. In October 2018, the government came out with the Fiscal Responsibility Act. And the Fiscal Responsibility Act would not allow the government to spend more than 5% of their total budget. Now, from the report we had yesterday and from their own document, IMF recorded 7% in 2018 and 7.5% in 2019. But from the Finance Ministry, they came up with 6.3%. That was the deficit in 2019. Indeed, if it is even 6.3%, then the challenge is that it has gone beyond the Fiscal Responsibility Act. So why are we not hearing something from the Fiscal Responsibility Council? Why would they have to spend against the law they had established themselves? It's about to shooting ourselves in the back. Now, there's one other funny thing. We call this very account a primary account deficit. And this is when we say primary account deficit, this is what we actually mean. Primary account deficit is in a situation whereby we look at your principal account, assuming you are going to pay for a debt. And the debt value, let's assume the debt value is just 10%. Or let's say the debt value is, let's say, $5 or $20 or 5 cedis. If it is 5 cedis, let's use 5 cedis as a basis. What happens is that we will not add the interest to it. So we would take the 5 cedis out of your revenue. And then we would be able to establish that even without interest, you'll be able to pay the principal. This is what we call the primary balance. Now, the most scarier aspect of this is that our primary balance without a budget and without an interest, it is negative 3.3%. And I can best tell you that IMF has pegged this one at 4.1%. So there is a possibility we can go beyond this. Now, the next question that comes in that everybody asks us that, are we seeing that we are likely to go for HIPIC? Or are we rather seeing that we're going to have a challenge in future? Let me tell you, we've been borrowing from the market. And most of the borrowing that we've been doing possibly all from the non-conventional, because when you look at our rating, as at April 8, Ghana was downgraded from B3 to B3 negative by Moody. And in 2016, before the government took over, you realize that Fitch had pegged the Ghana's rating at B3 B positive. So that is mean that Ghana's debt affordability rate is also deteriorating. Let me tell you what affordability rate is. What affordability rate is that we look at your income and then we less the interest on loans you've taken. Because most of the loans that we take are all bonds. When it comes to bond, they are well-structured kind of facility. So you only be paying interest, and then you pay in a bullet the principal at the end of the tenure of the loan or of the bond. So therefore, if your interest payment out of your revenue is more than 36%, it means that you are almost out of the debt affordability ratio. The debt affordability ratio should not be more than 36%. It has to be 36%. And so as I'm talking to you now, our debt affordability ratio is about 45%, far way above. And as we are not graded AA, and we are not graded AAA, and we are not graded BB, then there is a high possibility we are just about a step away to junk. So there is a high possibility we may struggle in future to look for foreign bonds or to look for foreign monies to bring in. The situation in which we are is quite scary. The target the government set for themselves on the revenue target was 29.75 billion. The actual truth is that was within the first quarter. That's it. That was within the first half of the year. That is from January to June. And then the actual achieved amount is 22 billion and not 29 billion. So it means there is a shortfall. Now, while there's a shortfall in revenue, the government has critically attributed the reason for the shortfall in revenue to COVID-19. And I disagree. I totally disagree. Let me tell you why I disagree. I disagree because the banking sector cleanup, the total amount involved to be paid to depositors is about 21 billion Ghanaian cedis. The government withheld this amount. The government was not giving this money to the citizens. And let me tell you, if you want to grow your GDP, if you want to grow your revenue, it is when money is in the people's hands. It's when people invest the money. That is where their bottom line grows. That is where their profitability grows. And while the profitability grows, the taxation will certainly also grow. But if you would hold about 21 billion and you are not paying it to this, and it led to a lot of businesses collapsing, and it led to layoff of so many people within the industry, service sectors, all over the places, and then you come back and tell me that your revenue is falling and you're attributing it to COVID-19, honestly, I will tell you that is lies. And I will tell you it doesn't add up. There is no economic mathematics that you will be able to convince me with it.
That's a very interesting analysis, because now you are saying that they are seeing the results of the kind of decisions they have made over the years, and that it has nothing to do with COVID-19. It has to do with the decision they have made in the financial sector, whether or not they are even paying those who deposits were at the banks, because there are a lot of big depositors. There are also big people who had huge investment in some of the financial institutions who have not gotten a penny out of it. And a lot of them are collapsing. People are dying because they can't get those monies back. You are saying that all this is what is showing in the fact that they are missing their revenue target?
Yeah, revenue target. Exactly. You so let me tell you something. Economy grows, and we create economy. We don't inherit economy. Let me give you a typical example. How do they even take calculations for their GDP? You have to look at so many selling, food courts, restaurants, the services that people render. That is what we use in calculating GDP. So if you collapse businesses, or monies are in your hands, citizens' monies are in your hands, and you are not freeing them out to people. And because of that, businesses are collapsing, people are laying off from jobs. You are having your PAYE dwindling because people have been laid out of job. Suddenly it will affect your tax bills. So if you put the burden on the COVID-19, I would be the number one to tell you that, look, your economic analysis is flawed, and your economic analysis does not really make sense. That's one key thing I want you to understand. Now, let me show you something as we move further. You see, while that has been a problem, when we look at the government has spent over just half a year, the government spent about 46 billion, and then the total revenue that he accrued was just 22 billion. This is to tell you that if you just want to work a simple ratio, you'll tend to realize that he has spent about 47% of his total revenue within that short time. And that is quite scary. It is self-inflicted economic management. It is not that they really know how to manage the economy. It is just that they want to drag the economy into mad. But one thing is that our people should open up. Yes.
Are you suggesting that this is intentional? Are you suggesting that
if it's not intentional, then it's incompetence? If it is not intentional, then it is incompetence. It is incompetence, or it is about the fact that they really don't know how to manage the economy. Let me say something. Look, I would believe that the finance committee in Parliament, they should not be just looking at the fact that you open the account and it's miscalculated. You see, when you do that, you're missing the point. You have to be looking at a situation that has got a massive impact on the economy and the way a lot of people are going to suffer. And this is purely based on policy decisions. They are not based on accounting decisions. They are based on policy decisions. And if they are based on policy decisions, we will have to subject their policies into a clear-cut analysis. And then to be able to arrive at why are we at where we are? And why should the situation be as worse as we are now? Let me give you one staggering position that you have to know. Let me tell you one thing. Look, if you want to invest in the economy, there is something that we do look out for. We have something we call the GDP per capita. The GDP per capita, it is the, what do you call it, the final price of goods and services come together as a total value. That's what we call the GDP. Then we divide this by the number of the population. If you divide it by the number of the population, any other figure attributed to individual is what we call GDP per capita, right? That is to mean that this is what the nation produces, and this is what the nation should have. And then we have another one, we call it GNI. The GNI is gross national income. Now, the gross national income, let me explain that one to you too, much more easy way. The gross national income is a situation whereby we have Ghanaian citizens in the diaspora. For instance, like we have Arnold and Co. in the United States. And they are working, and they are bringing in, and they are generating a lot of dollars. And then we have foreign citizens in Ghana who are equally working in Ghana here. And they are also generating money. So what we only do is that we knock out the difference between the citizens of the foreigners in this country from our citizens in the diaspora. We knock the difference of their revenue out. Then we would be able to see whether how is their performance, how is our citizens performing outside. Let me tell you something that they are not telling you. I want to let you understand this way, that could you believe that the GNI per capita, that is the foreign citizens' contributions into Ghanaian economy, is about $2,100 as of 2019. And then the domestic GDP per capita is $1,700. That is supposed to mean that it is better to work outside the country than to work in your own country. That is what it means. And any other good economic and financial analyst, when they pick up the document and they want to look through and take an informed decision, upon citing on your GNI and your GDP, they will tell you that why is your GNI growing? Does it mean that you have a lot of people in diaspora who are working much more better than they having to stay in their home country? Because if you have people staying in your own home country and they're producing very less, and their GDP per capita is 1,700, and then you have your citizens outside the country, and their GNI per capita is $2,100, what could be going wrong with your country? That is price treasury, and that is to tell you that things are not going well in the economy. And this is what they wouldn't let you know. I kept on saying this. Our economic analysis should not necessarily be limited to the accounting figures they report. We should look at it. Well, indeed, the economy is really well managed. That is my main concern. Now let's move on to the other one. Why I was telling you that it was not a COVID-19, and you tend to understand me from this angle. Look, the government growth target, the government set 6.8% for the growth target. 6.8%. The day that was on Thursday, 23rd, when they were doing the mid-year budget review, what we tend to understand is that we are now have to look at our growth target to be 0.9%. Now, the question that we have to ask ourselves is that if our GDP is going to be 0.9%, what is our growth rate, population growth rate? When we talk about population growth rate, this is what we exactly mean. You see, the growth rate, when the growth rate comes in, then you will have to take the growth rate, if the growth rate is 2%, or the growth rate of the population is, let's say, 1.5%. If it is 1.5%, we will have to take 1.5% out of our GDP growth rate. And then we'll see whether we are reporting negative. So if this one is 0.9 and the growth rate has not been considered, then we would consider this one as a nominal GDP and not a real GDP. So if we're going to get to the real GDP, then there is a high possibility that we might be recording negative real GDP if by the figure they have written, it's a nominal GDP. Now, tell me, we have economic preambles and then we have the economic variables. If you're looking at economic variables, these are the 5 indicators you'll be looking at. You'll be looking at the GDP, you'll be looking at unemployment, you'll be looking at inflation, you'll be looking at interest rate, and you'll be looking at exchange rate. These are 5 major economic variables that we use to do assessment of every economy. Now, the challenge we have is that government came back and said that, hey, I'm boasting myself because I have introduced NAPCO. And the NAPCO that the government claimed that he has introduced, he has employed 100,000 people, or 100,000, individual youth. And this 100,000 people, the government is saying he has spent 1.6 billion on them, and everybody should clap. In this country, in this part of the world, which is in Ghana, when you check the, the demography, you would tend to believe that at least the youth will account for almost 60 to 70% of our population. What the minister and what the economic managers are not telling us is, what is the labor participation rate? How many people participate in searching for jobs? What is the unemployment rate? That's what we want to know. If we take it, for example, granted we even divided by, we divided by 2. If the population, let's assume the population is even 30 million, and we have to divide this 30 million by 2, you will get 15 million. This is even outrageous because it should be more than that. It should be about, let's say, 20 million plus. If it's 20 million plus, we can assume that maybe probably we have 10 million people who have a real job to do. If we have 10 million people having a real job to do, and then we have another 10 million people who might be unemployed, and out of the 10 million, you provide a direct job, not an indirect job, direct job, by providing them these jobs, temporary jobs, which, of course, amount to just about 100,000 people. And then you come out to say that you're solving the unemployment problems. Are you making mockery of the system? Because that is not the way employment is supposed to be created. And then the other consequences of it is this. The Ghana wage bill is too big. The wage bill takes almost about every money they take on their income tax and properties. If you were budgeting about 26 billion, that was the budget that the government brought. That was about 26 billion, which is far bigger than money allocated for infrastructure development, which is just 9 billion. Now, because of NAPCO, that would skyrocket the figure. And clearly, what this means is that government is just engaging in just trying to offer people jobs without even we measuring it with production. We are not producing. And as far as we are not producing, and then you keep on employing, and the revenue is dwindling, which way do you think this economy is leading to? The Ghana has become a debt-distressed country. We have about 70 billion, and the debt to GDP It is so exacerbated and it's so high because what is happening is that the European threshold is about 60% to your GDP and not more than that. And once you go more than that, up to 70% of your GDP, it means that we are hitching to the HIPIC levels, or possibly we're going past the HIPIC levels. From the analysis the government gave, or the finance minister gave on the to the August House on the 23rd, if you want me to tell you my clear opinion and my assessment, I will tell you that you're throwing dust to the people's eye. The economy is not manageable, and it's not me who's saying it. You can check from all international outlets and find out from yourself the figures that have been thrown out. And suddenly you will know that they will be leading the country into a much more difficult position, and people will be panting for breath, and they wouldn't get. Until things change radically, there is no way. Because they also know yesterday or the day before, when they read the budget, he said it. There is tightening of economic conditions outside the country. The simple question I always ask is this way. If you are a finance minister and you go out there to float out bonds, and the bonds is purchased by citizens of other countries, and the reason they are able to buy your bonds is because the government gave them leverage. They are able to work. Their money has not been trapped in. When you get to the United States, where Arnold and Co are residing now, they use credit cards. Why are they not using credit cards here? If you don't have credit card and your citizens have got their own savings, why would you trap your savings? What other country that you go there to borrow, they give their citizens credit card to spend when they don't have money. They spend when they don't have money. Your citizens don't spend when they even have money, because you have intentionally and deliberately block up their money in the banks, lock up their money in the banks, and you're putting the economy, or you're bringing the economy aground. And you feel we should clap for you for a better performance. What do you think if you do? What do you think would happen to your GDP?
Doc,
what do you think would happen to your revenue?
Doc, certainly there's a lot to be said about what you heard, but I think because of time, I'll ask you one last question. I'm hoping you'll be a bit brief on this one, because so that I can go back to the rest of my panel. But and so the other issues. The issue now, we're looking at the government promising and giving away a lot of freebies. They are promising free electricity, free this, free that. They have a lot of plans that they plan to unfold before the election. Based on what you're saying, is it the direction the government should be going in? And what are the consequences of this direction?
The consequence is so high. I think they are seeing the defeat. They are seeing that they will be defeated. So because of that, they want to mess up the economy before they leave. Because the truth is this: when you are paying more electricity bills and more water bills, and there is no lockdown, now, where are you going to get the funding to pay for all this? Is it from revenue that you have not been able to mobilize, or from which other source? And most of the freebies are quite tricky. Some of them would not even materialize at all within the year, and they know it. But one thing is that they know Ghanaians easily fall for any other lies that they peddle out. And because of that, it wasn't surprising at all for them to turn that one out. We had to watch out, because if you're not careful, our domestic debt and our foreign debt will swallow the country. And the country will rather be stuck up to a national or sovereign financial crisis in a very due course. As I'm speaking to you now, we have we have energy debt that accrues almost every year. And 2001 to 2003, we are expecting to have about 1.6 billion and 2.7 billion that have been paid on this energy debt, which is in dollars. And that certainly means that we need to go out there to borrow dollars before we can free up this. So the challenge that we're going to have in the subsequent years, it's not going to be a joke. It's going to be very difficult. And let me tell you, if the opposition in the waiting also thinks it's just going to be an easy ride, once they leave the office, it is going to be very challenging to put the economy together. And that is my final